Hello everyone. So in this video, I wanna walk you through PayPal's earnings report. They released earnings yesterday, and I tune in to listen. I tune in to the conference call to hear what management had to say, as I normally do with all the companies that I own. And yeah, so overall, I think the results were positive. Growth was a bit sluggish, but we will talk about that in this video. So instead of going through the entire quarterly report, I've done that work, and I essentially compiled all the essentials in a Word document that you can see right here. And I just divided into the negatives and the positives for you guys to try to make sense of the data. I think doing it this way will allow you to digest information more smoothly, especially if you are already a shareholder in the company. So you can see that they reported mixed first quarter results. They beat expectations on earnings, but fell short on revenue. And this is part of the company's ongoing shift towards profitability over pure growth, which is something that I think is positive. And the new CEO has made that point clear ever since he took the helm of the company about 2 years ago. So what were, in my opinion, the negatives from this report? Number one, we have you can see that revenue only grew 1% year over year, which also fell short of analyst expectations. This is well below PayPal's track record, revenue track record. So you can see that over the past many years, the company's revenue has grown at almost 15% per year, which is pretty substantial. But we can see that over the recent years, revenue has been somewhat sluggish, and that is, of course, due to competition and the fact that there has been some slowdown in the industry as well. So you can see, for example, if on a trailing 12-month basis, if I just go back to 2022, you can see that the CAGR, so revenue is already down to 7%. Okay. So revenue has been declining, which is something that it's not great to see. But at one point, I want to see this going back up. However, remember that management is putting more emphasis on high margin businesses and wants to get rid of low margin businesses, which I think makes a lot of sense. But what happens is that this impacts revenue, at least over the short to medium term, and that's what we are seeing right here. So one of the main KPIs of PayPal is total payment volume. Right, and you can see that total payment volume only rose 3%, which was below expectations, which is why I just put it here as I categorized it as a negative. And you can see that total payment transactions declined 7% year over year to 6 billion, and payment transactions per active account dropped 1%. All right. So what is total payment volume? For those of you who are just new to this, total payment volume is the total value of payments successfully completed on the platform. Okay, and you can see that it only rose 3%. Now, the reason the growth was somehow sluggish was because both total payment transactions and payment transactions per active account dropped. Yeah, the first one dropped 7% and the last one dropped 1%. Okay, and I mentioned that here in my notes. I say that the trailing 12 growth, the TPV growth slowdown was driven largely by a drop in both total transactions, and per user activity. And this can, of course, signal potential headwinds in user engagement. This is something that we're going to have to track going forward, because what this tells me is that engagement on the platform may be slowing down a bit, and that of course will negatively impact total payment volume over time. And sure enough, it only rose 3%, as you can see right here. Another note that I highlighted here is that management attributed a weak revenue growth to a strategic pullback from unprofitable volume, as I mentioned, particularly from Braintree, its white label payment platform. So CEO Alex Chris emphasized that the company is focusing on quality over quantity, prioritizing high margin business lines. Okay, this is something that if I think this development is a positive, even though, of course, the fact that revenue has slowed down is a negative in my opinion. So it's just 1%. What about the positives? Okay, and you can see that also that free cash flow declines sharply, but this is expected given how much money, right, the company has been invested into growing its business, into releasing new features, and so on. So let's now delving deeper into the positives. And with regards to the positives, I think you can see it right here. So we have strong profitability improvements. You can see that non-GAAP operating income rose 16%, and that non-GAAP earnings per share grew 23%. This is very positive. So the profitability has improved substantially, which means that the management's efforts towards the management's shift from growth at all costs to profitability is working. It's bearing fruits. And this is something that I like to see. PayPal has become a more mature company, so I'm not expecting PayPal to grow at the past rates as it did in the past. But what I want to see is profitability improving over time, because if that does happen, it means more money will be returned to shareholders, and of course that's a positive for us. We want to see revenue growth. Okay, so I want to see that revenue will grow over time, but I'm happy with the sluggish growth over the short to medium term, because I don't want that revenue to come at the expense of profitability. Okay, and so my values are aligned with management's in that regard. So profitability is improving, which is good. I'm focusing here on non-GAAP metrics because they really show you the core. So they show you the core operating. They show you the profitability of the core operations of the business, right? Because they remember that non-GAAP measures they don't they exclude certain factors that can be, for example, one-off events, right? One-off expenses, something, for example, things like realized and unrealized profits, and also stock-based compensation. All of these can be one-off, or they don't really reflect the core operations of the business. And so I prefer to focus on these metrics. And if I do so, you can see that non-GAAP operating income rose 16%, while non-GAAP earnings per share grew 23%. Earnings per share grew faster, as you can see, than operating income. This is because management is doing a lot of buybacks. All right, they recognize the stock is cheap, and so the way they are allocating a lot of capital is they are just buying back shares, and we will talk about that later on. But overall, this reflects meaningful operational discipline and cost optimization under new leadership. The company reduced operating expenses by 2%. So why is this positive? You can see that the reason I think this is a positive is because and I will talk, they reduced operating expenses, so they are making the business more cost efficient. However, that is not denting active accounts improvement. You can see that active accounts increased 2%, reversing previous quarters of stagflation. So the number of active users is growing, even though it was slow. You're right, it's only 2%, but it's still growing. At the same time, operating expenses are decreasing. They are still spending money. Of course, they have to do this. They have to spend money on R&D, so marketing, all of this stuff. However, it's nice to see that active accounts are increasing. At the same time, operating expenses are declining. This reveals a great operational discipline and cost optimization, which I select, of course, as a big positive. Transaction margin dollars, as you can see, this is PayPal's key measure of profitability, and it grew 7%. If I scroll down, I made the effort to highlight that here. What does that mean? It means this is the transaction margin dollars. They represent the profit the company makes from each individual payment transaction it processes after accounting for direct costs associated with that transaction. So how do you do that? You do total revenue less transaction expense and transaction and credit losses. And so PayPal wants us to focus on this metric right here. And sure enough, it grew 7%, topping estimates. What this does is it indicates tangible progress in focusing on high margin transactions and improving monetization, which is part of management's current execution as well. So I'm very happy to see this improvement, and let's hope it continues. Active accounts, we already discussed this, okay? So the company was able to grow its active accounts while implementing tight cost controls, which is something I like to see. However, something that we have to discuss here, the combination of growing active accounts and declining transactions per user, which is something I selected initially as a negative, suggests engagement may be weakening, right? And this is something that I want to monitor going forward. You remember that payment transactions per active account dropped and total payment transactions also declined. And this can be signaling a weaker user engagement, even though active accounts are increasing. So this is something that I have to monitor going forward, and let's see what next quarters have in store for us. In terms of guidance, many people are always looking forward to hearing what guidance looks like, and of course they want management to deliver stronger guidance. But one of the main things I like about PayPal's management team is that they typically are very conservative. Yeah, they know that investors don't like that, but I like the conservatism, because there is, especially now with tariffs being implemented, and of course a lot of competition in the space. You don't really know how things can work out going forward, right? So I mean, giving too much of an emphasis, putting too much emphasis on quarterly guidances, in my opinion, is just how can I say, is just something that you shouldn't be doing, right? Because you want to focus your attention over the long term. And I think living quarter to quarter is too narrow-minded, too narrow-focused. So this conservative tone may disappoint investors hoping for upgrades. However, it shows prudent financial stewardship amid global volatility. Okay, so they reiterated full-year guidance. They cite ongoing macro uncertainty. However, we also something that I also highlight as a positive is the robust capital return, and you can see that they generated 1.2 billion in operating cash flow. They repurchased 19 billion shares worth 1.5 million, and that means they reduced share count by 1.5%, which is a lot, guys. So they are already on track for 6 billion in buybacks this year. And if that happens, based on the current market capitalization, that means a 9% buyback yield. How did I do that? Well, they want to buy back $6 billion worth of shares. right? That's how much they want to spend. And the current market cap of the company, if I go here, is around the current market cap. So if I go, is about 64.82 billion. And if you do 64.82 billion, so if you do 6 divided by 64.82 billion and then multiplied by 100, you get about 9.3%. That's a very high buyback yield. So they're returning a lot of cash to shareholders in the form of buybacks, which is something that I also like. In addition, I think, so another thing that I wanted to say is that, and of course, I told you about the fact that free cash flow declined sharply. And this is expected, as I mentioned, considering all the investments the company has been doing. And if I go here, to the report, you can see, for example, where is it? Look, this is the free cash flow, which, of course, you can see that free cash flow took a meaningful tumble. So the same time, so it stands now at 964 million, and compared to the same quarter last year, I mean, that's a 45% decline. So this is a big drop, okay? But it's expected considering, again, all the investments that the company needs to make in hopes of staying competitive in the market, okay? And this is something that is happening across the board. It's not just limited to PayPal. Every company, especially high-tech businesses, are spending a lot of money. And look, they have to make investments at the end of the day. And at least PayPal has the cash power, right? They have the cash power to do that. They are a very profitable company, as we've already discussed. And I believe, of course, that these investments the company are making are going to deliver profit down the line. All right. So I think a decline in free cash flow, even though I marked it as a negative, it's understandable, and it's something that I like to see because, again, the company needs to do that in hopes of staying ahead of competition, okay, and to consolidate its position in the market. So look. Overall, you can see PayPal's quarter one results reflect a strategic evolution, as I mentioned, from a high-growth tech darling to a more mature, efficiency-oriented business. Of course, revenue is going to be important, and I do expect the company is still growing. They have many products, many innovations. They keep improving customer engagement and experience. And so I still think the growth runway is going to be significant over the next many years. But PayPal is not the company it used to be 10 years ago, right? Like companies that are just starting can increasingly their revenue can grow their revenues at a much faster rate, of course. But that's not the case of PayPal, which already is a well-established player in this game. And so while top line growth has slowed, the company is is showing improved profitability, tighter cost controls, and a clear focus on capital discipline. Management's choice to maintain guidance reflects caution, but not weakness, as I believe many analysts are saying. With a strong balance sheet and continued investments in its core commerce platform, PayPal remains well positioned to navigate the current macroeconomic landscape and deliver long-term value. So this is my conclusion. This is what I can draw. Well, the main conclusion I can draw, and I think going forward things are going to look the same. So we are looking at a company that is all optimizing its operations, and I think shareholders are going to be rewarded long term. I like Chris. I really like this guy. This is his first time as a CEO. It's a big responsibility, but what he did in his previous job at Intuit was mind blowing. And he does have a lot of product experience, and I think many of the strategic changes that they are implementing are already bearing its fruits. So this is Mike PayPal's highlights, and in the next video I will comment on evolutions, Evolution's report. They reported this morning. That's one of our portfolio positions. In fact, it's our second largest portfolio holding, and the stock got crushed on the back of a very, what I think to be a very weak earnings report. But I will talk you about this in a second video, so I hope you enjoyed. Let me know in the comments if you liked this stuff, and if there is anything that you'd like to see me commenting on. And yeah, just let me know if you like it, if you gain value from it.